So we'll be starting off with financial statement analysis, where what we're doing is we're evaluating and interpreting the financial health of an organization in order for us to help our users of our financial statements make informed decisions. So the first ratio we'll be looking at to analyze our financial statements is our profitability ratios. Profitability ratios. And what these ratios look at, it measures how a business is able to generate profits in relation to revenue, assets, or equity. And the first one we'll be looking at the gross profit margin. And the formula for the gross profit margin is we're going to take gross profit, divide that by sales. And because this is a margin, we are then going to multiply with 100%. Now I have here the statement of profit or loss for a company called Think Numbers. So just quickly remember that the statement of profit or loss is where I record all of my income and expenses for that specific period. And we have for 2 years here, the year 2023 and the year 2024. So we're going to start off with the year 2023. The gross profit for the year 2023 was 150,000. So in order for me to calculate what the gross profit margin was for 2023, we'll say 150,000, which is my gross profit, divided by sales or revenue at 350,000. Multiply that by 100, and then that should give you a 42.86% gross profit margin. Okay, then we do the same for 2024, because remember, when you're doing financial statement analysis, you are also comparing whether we are now performing better according to our ratios, or we might be doing a little bit worse, who knows. So gross profit for 2024 was 200,000. And the sales for 2024 was given there at 450,000. This is a margin, so I'm going to multiply that by 100%. Then we'll see that the gross profit margin for 2024 was 44.44%. So we can slightly see that the gross profit margin has increased from 2023 to 2024, which is good, which is what you want, because what it means is that the company is managing its costs efficiently and is pricing its products well. So a good percentage for this ratio is anywhere between 40 to 6% to 60%. And as you can see, Think Numbers is well within that range. All right. Then the second ratio that we'll now get into is called the operating profit margin. And I think you can sort of guess how that formula now is going to look like. So ratio number 2, under profitability ratios, we are now going to look at the operating profit margin, where the formula for the operating profit margin is now going to look at operating profit divided by sales. And because this is a margin, we're going to multiply it by 100%. And what the operating profit margin looks at, it looks at the efficiency of our core operations. So whatever it is that our core operations is, whatever is our main course of our business, how efficient is it? And once again, we're going to compare 2 years. So I'll start us off with 2023, where the operating profit for 2023 was 65,000, as given there. 65,000 divided by my sales once again, which was the 350,000. Multiply that by 100%. Then our operating profit in 2023 was 18.57%. Then we do the same for 2024, where operating profit for 2024 was given to us at 90,000. Divide that by 450,000 multiplied by 100% to give us an operating profit of 20%, which once again has increased, and which is what we want. And an ideal percentage for the operating profit margin is anywhere between 10 to 20%, because then it would mean um, we are efficiently utilizing our core operations to gain a profit. All right. Then we're going to move on to the third ratio under profitability ratios, which is now my net profit margin. Net profit margin. And what this ratio now looks at, it looks at the overall profitability of our company. And I think you can sort of guess what the formula is for this one. It's going to be our net profit divided by sales. And because it is a margin, obviously we're then going to multiply it with 100%. Starting us off with 2023, the net profit for the year for 2023 was 44,640 divided by my revenue, which was the 350,000. Multiply that by 100%, then you'll see that our net profit margin was 12.74% in 2023. Do the same for 2024, where our net profit was 61,200 divided by my sales of 450,000. And then it's a margin, so multiply that by 100% to get it to a percentage. We'll see that once again, net profit also increased by 13.60%. And we can definitely see that this is a healthy net profit margin, because what you ideally want for this one is between 10 to 20%, because it shows that overall our company is quite profitable. All right, then we now have our fourth ratio, which is now going to be our return on assets ratio, or our ROA. You might have heard of this term before, return on assets. And what this ratio is now going to look at, it's going to look at how well our assets generate profit. So we have our return on assets, or famously known as our ROA. And the formula for this is going to be our net profit divided by our total assets. And once again, we're going to multiply this by 100, and we'll start off with 2023. So in 2023, our net profit was 44,640 divided by total assets. Now it's total assets, meaning current and non-current assets. So in this statement here, I have my statement of profit or loss, right? But what I'm looking for is I'm looking for my assets. And in the statement of profit or loss, you only have two elements, your two accounting elements, which is your income and your expenses. So we'll need to roll over and find what is the total assets for think numbers. Okay. So if we scroll up, we have there the statement of financial position as at 31st of December for both of the years, once again, 2023 and 2024. Reminder, we are working on 2023. And as you can see there, my total assets, meaning non-current assets, and plus all of your current assets, it added up to 210,000. So I'll take this back down to my ratio and say net profit divided by my total assets of 210,000, multiply that by 100%. Then you'll see that our ROA in 2023 was 21.25%. We do the same for 2024, where we'll take our net profit at 61,200, divide that by my total assets. And in 2024, our total assets amounted up to 280,000. So we'll take that, divide that by 280, multiply that by 100%, and then we'll find that in 2023, for our ROA was 21.86%, which is a slight increase from the 2023 figure, but slight increase is still an increase. And what you ideally want for this ratio is that you want an ROA anywhere between 5 to 10%. That's generally a good ROA. And think numbers is well over that in 21 points. Okay. Then lastly, under profitability ratios, we have our last ratio, which is our return on equity ratio, or the ROE ratio. And I think once again, you can sort of predict what the formula for this one is going to be. So next one, return on equity, or ROE. And what we're looking at here, we are looking at the return to our shareholders. And the formula for this one is then going to be net profit divided by our equity. And we're going to start off with 2023. From my statement of profit or loss, my net profit was given to us at 44,614. Divide that by equity. Once again, equity will be found in my statement of financial position. So in 2023, our equity, right, equity, as you can see there, amounted up to 150,000. So we're going to go and divide our 44,640, divide that by 150,000, multiply that by 100 to get it to a percentage, and we'll see that in 2023 we had a 29.76% return on equity. And if we compare it to 2024, where my net profit was once again 61,200 divided by my equity, which is the addition of share capital and retained earnings, it comes up to 170,000. Multiply that by 100, and we'll see that our return on equity amounted to 36%. And an ideal percentage for this ratio is anywhere between 15% to 20%. All right, and that's it for profitability ratios. I'll see you on the next one when we look at liquidity ratios.